Hey everybody, Jim Malone here, coming to you live from Dallas Trading Floor. It is Tuesday. It is Tuesday, and it looks like the market may be running higher, which is great. Finally, hold on one second. I have a issue here with that. Let's see. I'm going to be on TikTok here. Going to try to go back onto TikTok. Hold on one second. I'm going to be back on TikTok in just a second. Okay, we have issues with the with that. So let's see. Let's go back live. Oh, there we go. I'm going to go live again on TikTok. There we go. 3, 2, 1, and we are live. And we should be live on Facebook, YouTube, Twitch, and Periscope. So everybody out there, thanks for bearing with me on the technical, and we'll just get into it right now. This is October 7th. This is YouTube. This is YouTube. This is Dallas Trading Floor number 147. And basically, we are in a confirmed uptrend, but it's been weak. We haven't seen a fall through day. We may get a fall through day today on the NASDAQ. We got one on the Dow, but not on the NASDAQ. So it's kind of been a mixed picture, but I do think that we're starting to see some strength in the market. It looks as if there's been a reversal on the stimulus. So it looks like the stimulus may be going forward before the election. So it seems to be keying off of that, and that seems to be an important thing. So hopefully it's starting to get mildly bullish, and there's Fiverr the Vol is on there, and we are in a confirmed uptrend. So we're going to want to start moving out of cash into possibly some positions, and I definitely moved into some positions on Fastly, FSLY today. And it's proven to work pretty good. When this slide was taken, we were up 1.87%, or about $208. So it has moved about above the key level. It's 11,363, and the key level on this is about 11,300. So we have definitely moved above that, and we are starting to move above the 50-day moving average. So that's very, very bullish, and it's still weak, but it is starting to move very, very nicely. So just wanted to bring that up. Let's take a look at the S&P 500, and it is pulled above that decisively above the 50-day moving average. This is bullish, and so it's time to start looking at possibly putting some money to work here as we go forward. Now, here's the thing: the volume is a little bit it's not as much as I'd like it, but it's still up $6.5 today. The key level on this is about 325 on the spider, and it's made some very, very nice progress. So I think that we're moving in the right direction. Time to start looking at possibly putting some more money on the table, and taking it out of cash and putting it to work in good quality stock. So that's really what we want to be kind of looking at right now. Now, I also want to show you, this has been the laggard. Actually, it's been the leader most of the time, but now it's lagging a little bit, and that's the QQQ. The QQQ Trust is the largest ETF that covers technology primarily issues, and that is the 100 largest stocks on the NASDAQ, and it's moved up above that 50-day line. So that's very bullish. We still are a little bit light on the volume, but it's up $5.07. The key level on that was 275, and we're up above that. So I am fairly confident that we are going to be moving a little bit higher into the election, barring any calamity or anything like that. So where we did have that correction, now is the time that we want to start looking at possibly putting more money to work. It just seems like that is the situation. Now, I also want to show you a psychological indicator that I look at. It's called the high-low indicator, and it's kind of hard to read. It's kind of confusing, but if you'll notice, the trend on that is straight up. That means that this indicates when it comes up to this level of 2 here, typically that means that we are back. We have made that reversal from the correction that we had basically from the third week of August up until just about 2 weeks ago. So we're definitely made a nice turn there, as you can see by this indicator. This is an indicator of stocks that are making their highs and making their lows. And typically, if it's at about a 2 level, then we are basically making a turn to the upside. So that's what this is showing, at least in terms of the psychological. So psychologically, I think we're good on the market. I wanted to show you a potential. Now, this is sort of in the bullpen stock, getting ready to get on the ready list. And I'm sure a lot of you've heard about this. It's called Cloudflare, but it's both a cloud computing and stay-at-home kind of play, but it's a good one if you're looking at a fall one to Fastly where we went today. But I want to show you this one. It's called Cloudflare. The symbol on that is NET. Currently trading for 43.09 when the slide was taken. It's up about 2% today. Fairly good volume, but not as much as in the past. So this is it's weekly moving up, but I do expect to see the composite rating of this move up probably to 93, 94 in the coming days and weeks. Here's the thing: this is not a buy yet, but it's something that you want to kind of put in your quiver in case we get the right conditions. But this is Cloudflare, and the symbol is NET. Just wanted to bring that to your attention. Now, for full disclosure, I want to show you the stocks that I'm in currently in my portfolio and just how they're doing. And this is right here on my current holdings. Of course, I'm still in Oracle. I'm waiting for this to move. The pivot on this is 60.50. And I've been in this a while, and it just doesn't want to move above that. Just want to budge above that, but it's up 2.18% today. I'm also in Taiwan Semi. It's up seriously nicely at $3.64 today, or almost 4%. I do think this one's getting ready to pop. TSM, especially going into the fourth quarter, I think they're going to show some very, very nice earnings coming forward, just because everybody uses these guys to fab their product, including NVIDIA and AMD, and a lot of companies use Taiwan Semi to make their product. So it's also doing well. Again, a little bit of a issue in terms of the volume. It's a little bit off on the volume. Tesla is up today. Tesla is in what they call a basing move, and I think that we're going to see Tesla hang out probably until after the election, maybe into the fourth quarter, from about 405, 407 range on up to about 435. I think it's going to be trading in that range for a while. And because of that, I have sold a 450 call. It's a November 20th call that I sold at the beginning of the week. But I do think we're going to see it in a trading range. I don't necessarily think we're going to see it breaking out because it is basing. That's the terminology for it. It is basing. Another interesting stock that I do have in the small portfolio is Sorrento Therapeutics. It's up today about 5%, which is pretty good. Still on fairly weak volume. It's up to 11.40. I have sold a call on this one that expires relatively short time for 13. So this is a lower price stock, but quite good chart action on this one as well. So I'm in this one. And of course, the one the last but not least is Fastly. I sent out trade alerts on this one. I sent out a trade alert this morning, and I had one on it yesterday and also at the beginning of the week. This one was ready to pop. It did. It popped. When this slide was taking us at 114, there is a buy point. A new buy point on Fastly has been created, and this is basically on a first stage cup without handle formation, which is very good formation, by the way. And that, let me flip through here. That buy point is right at about 117.70 is where that is. So 117.70 is the new buy point. Now, you can buy them below the buy point. It's just that if it exceeds the buy point, it's typically going to create a floor on the stock for further movement upward. I do think that we're going to see some very nice action on this based on the funds that have moved into this. Also, there is a very significant fund that's in Fastly, and it's the contra fund, and it's something that I look to see if these guys are buying something, because this typically shows that there's a lot of very, very, very strong interest. So it definitely was in there. So the Fastly is moving up, and I do think it has more. It has a longer way to go. Again, the buy point on this 117.70 going forward. So let's get into some of the questions. Thanks for waiting, everybody. I appreciate it. So let's see. Thanks for Fastly. That's it. I don't know if Fastly is the next Tesla. It's just so hard to figure this out. I do think, though, it's in a very nice area. We may see, who knows? Who knows if it's going to move, like Tesla. It's really, really hard to say at this point. But I do think that we're going to see some nice action on it. And let's look at the chart on Fastly right now, just to kind of look to see kind of what I'm talking about in terms of the buy zone. So here's the chart on Fastly. This is a live chart. It's at 117. Oh, it just went 118.02. Okay, it's just come into the buy point. By the way, everybody, there is a buy point on this one. I'm going to put this out there on the chat. FSLY buy point is equal to 117.70. And so I'll just put that out there for everyone. And by the way, if you're looking on TikTok, and my machine is working, which sometimes it isn't, because I am technically challenged sometimes. All these charts and everything are available on the YouTube site. It's super easy to get on that YouTube site. Just go to www.youtube.com/DallasTradingFloor, and you'll see all the charts that I am showing you right now. So let's look at this. It's got a relative strength of 99. That means that Fastly currently is doing better than 99% of the S&P 500. So that's a pretty good company to be in. I think it is, anyways. Let's look at the buying chart. This is the William O'Neill buying chart. And by the way, I am a CanSlim investor, so I do use the metrics that William O'Neill has set out in his book, How to Make Money in Stocks, a Weighting System, Good Times or Bad, and it's been very successful for me. This is 8 out of 9, which is super excellent. Very, very good. Let's look at the funds that kind of are in here. The Fidelity Contra Fund, you definitely want to see that. It doesn't have a lot of the stock, but if Fidelity Contra Fund is in a particular IPO issue, you want to take a very, very hard look at it, because that is kind of like the good housekeeping seal of approval. It does help in that. Also, as you can see, in June, we had 235 funds that were in Fastly. Currently, as of September 30th, we have 265. So this is going in the right direction, the right way, and it's going up. So what moves the stock typically are funds that are buying it, and not individuals. I wish we could move the fund, move the stock as individuals, but we just really can't. We have to kind of look where the big whales are going and can follow along, kind of like little minnows. And I that's how I invest. I look to see where those whales are going, and then I just follow along right after them and see where they're eating. So we've got 40% funds in there. From if everything holds well with Fastly, we should see it from about 40 up to about 60 or so in terms of fund ownership. That's going to give us some nice movement on the stock. Now, how high can go? We don't know. You never know. But it's got a very nice trajectory as it stands now. And they're in a very good area of the market. The cloud infrastructure area, it's just doing really well. So that's kind of an interesting on Fastly. All right, so Mr. Sid, thank you very much. My thoughts on Sale. Bought it today, not showing any strength. Let's look at Sale. Just see if we can take a look at that stock to see kind of if kind of what the charts are saying, kind of what the tea leaves are reading. No, it's not tea leaves. It's all about the chart. So let's look at the chart to see if we have any strength on there. Well, it's gapped up. So it gapped up basically on this Easter egg. So that's not bad. It's pulled back a little bit. That's understandable. Let's look at the daily chart to see if we have any place where we could strategically buy that. this is not a bad chart. It's just that you're probably a little bit late. You probably missed the gap up, but it's so hard to get the gap up. This is essentially forming a high tight flag. This is probably not ready to buy right at this absolute moment, but it may be shortly, because let's look at the checklist. Well, it's 100%, so that's excellent. That's really good. We've got increasing fund ownership. That's excellent. We don't have the Fidelity Contra Fund in here, but we do have fund sponsorship, so that's good. This one you might have to have a little bit more patience on this, but this is certainly setting up very nicely. 97 is the relative strength, so that's very, very good. It's pulled way above the 21-day exponential moving average, and it's also above the 10-day. So I am seeing kind of a potential high tight flag. Let's look at the weekly chart, because you can't tell unless you look at the weekly chart. This is a classic what they call pocket pivot, where it isn't quite wide enough for a full cup formation. It's a little short of that. This is a pocket pivot. And this typically happens in markets like this that are changing character, going from correction into uptrend. And that's sort of where we're at. This is a good time to be looking for stocks that are going to break out, because when the stock market has corrected and we have a follow-through day, which we did have on the Dow, and we probably will today or tomorrow, we probably will have the follow-through on the NASDAQ, then we're going to see a lot of these breakouts and these potential pocket pivots. So this is, I don't think that necessarily is a sale point. Sometimes you can't hit them right on the head. It's really hard to, you have to get into them sometimes, but I don't think this is a bad stock. And I think that, yeah. Oh, you bought some Fastly. That's good. I think you'll do well with Fastly, because I think that's getting ready to move to the next level. Just my take on it. Yo. Thanks. All right. So let's get to the questions on TikTok. And thank you for holding on here with all my technical difficulties. So, what do you think of Workhorse? Okay, I like Workhorse, actually, because I do think that it is a trend. I mean, electric vehicles are not going away, and one of the great advantages of electric vehicles, especially if you are in the delivery vehicle business, is the fact that the maintenance costs are so much less and the fuel costs are so much less. And it really makes a sense, because a delivery truck that's electric can go to the loading depot. It could be charging while it's being loaded, and then it goes out and it does its runs, and then it comes back at night and it gets charged up again. So you have less time and less maintenance, so that's looking pretty good. And electricity, if you can get it to work, is actually cheaper than diesel. So that is looking good. So let's look at the Workhorse chart after all that job owning about Workhorse. 99, that is excellent. We did have a buy point on it. The buy point on the first stage consolidation was 22.90. It's at 24. It's definitely buyable right now. It's a little bit higher than I would like to buy it at. It's extended, but not very much. So let me just put up here for everybody, WKHS buy point is equal to 22. 22.90 on a first stage consolidation. There we go. Put that out to chat there. Hopefully that, the buy point, and did I get that right now? 22, 22.90. Okay. So let's see if I can 22.90. Very good. Okay, so I'm going to put that out there for everybody on the chat. So hopefully we'll see that in just a second. All right. So what do you think about Square? SQ bought some November 6 calls. Well, let's take a look at Square to see how it's trading, and let's look at some of the options, see if I could give you an idea on some of those options. See the trend. Okay, here is the trend. It looks a very nice chart, by the way. Very, very nice chart. And you say that you are in the November 6th. Okay, so that's going to be about here. let's look at the trend here for that. I'm going to take it really from the beginning of this run, which is basically about here, and see if we can get you a good trending line. Okay, there we go. Okay, there we go. Okay, so that's the trend. The question is, are we going to make it? Is it going to go high enough? It's 178. What are the calls? Okay, I would 180. I think that you're probably going to be in the money. It might go as high as, I think it's going to pull back though, based on this trend line. I think it's going to pull back a little bit. I try to buy, if I was going to buy the naked, I don't typically like buying naked calls. I would try to see if I could get a 180 or 185. I don't know if you can go that low, but let me look at the options here to see if there's anything there. Okay, there's a 185 for 19. So, okay, let's see if I could get some more information. Yeah, these are okay. So I'm showing really basically it's only the December 20. This is the main call. I would, yeah, boy, these are high. 15. You might want to go out. I'd probably try to buy the December 20th instead of the November's. I'd probably try to do that, and I would probably try to go in. Oh gosh, I really would like to. The one I would buy would probably be the 180 on the December 20th 180. But it's going to be a little bit hard to get a good price now that Fastly has taken off on the covered call. So that's kind of gives you sort of my idea in terms of how I would trade it if I were buying the naked call. Your thoughts on HYLN? Let's look at HYLN real quick. HYLN. And that is, okay, interesting. Cedar Park, Texas. By the way, for all you out there, Cedar Park is right next to a place called Leander. And there is a place there next to that called Lago Vista. And I'm actually looking for a lot right now. If anybody has a lot to sell in Lago Vista, it's near Austin. I'm looking for something there. So that's a cool place. It looks like it is just come out of the chute. Really interesting. Okay, so provider of electric powertrain solutions for the commercial vehicle industry. Well, and it's got some good market capitalization. Very interesting company. I suspect that there's going to be a lot of activity in the Austin area with the new Tesla plant. It's got 98 relative strength. That is super. Let me see if I can give you something related to the funds and ownership. It's got some funds in there, so that's not bad. It's got 26 funds. This is a little bit, the checklist is a little bit weak. Okay, here's what I recommend on this one. This isn't ready to buy yet. It does have a buy point at 34.67, but it's below that right now. It's fallen through the 50-day moving average. It still has very good relative strength. You know what? This is just too volatile right now. I would hold on to this. I'd watch this one potentially. It does have some fund management, so fund ownership, so that is good. It's got a lot of good things going on for it. I will be I'll tell you that for sure. It's got a lot of good stuff going on with it, but right now it's just too volatile. I wouldn't buy this one, but I'd watch list it. I would definitely watch list this one, and this one could be very big, but be very careful in this one because it's pulled below the 50-day moving average, and I typically don't like to buy them if they've done that, because that is the sign of potentially get weakness, and you don't want to buy them weak. You just always want to buy in strength. Do you talk about WWR? Is that right? WW, is that WWR? WWR. Let me see if I can bring up WWR. I'm not sure I know that one. WWR. Nope. Did I get that right? All right. Yeah. Wastewater resources. Okay. Let's take a look at wastewater resources here. I wouldn't really recommend this one based on what I'm seeing here. This is more of a penny stock. It doesn't. It does have some funds in it. It has 9 funds in it, but it's pretty thin. It did have a big day. Just came through a big day. So let's kind of look to see. The checklist isn't bad. It's 6 out of 9, which is my minimum. Industry and sectors is good. Industry sector, and it has decreasing fund ownership. I think that you have to wait for this one. I don't think this is a buy right away. Wait for it to firm up a little bit. This just doesn't have the right looking chart. It's moving from the top left down. I just can't recommend this one, unfortunately, right now. But always keep it on the watch list. But I wouldn't buy this one. It just doesn't. It just doesn't line up, unfortunately. Okay. Did you provide any? No. The only alert that I put out today was on Fastly. Again, I don't put out. This is basically how I'm trading it. I don't put out a ton of alerts, but typically when I do, I try to make them as good as I can. And Fastly definitely was when I put that one out. And by the way, I apologize for the spelling. I didn't proof everything when I got it out. I was having to write it very fast because it was starting to move. So today the only trade alert that I had was on Fastly. But hopefully, when they come about, I will be sending them out there. So if you do want to get on that list, and it's super easy to do, all you have to do is go to the website, and I'll show you that right now. This is how the website looks. Basically, it's www. Dallas Trading Floor, and then right up here it says subscribe, free trade alerts, and then right there it's a first and last name and email address. Hit that subscribe. Of course, it's all free, so that's just put any information in there. Now, I do have a small portfolio that I trade that has a watch list on it that I build, and you can sign up to get a link for that. Super easy. It's right down here. First, last, and email, and then just hit submit, and you'll be good to go. And by the way, if you want to look at past episodes of the YouTube channel, you just go over here to the YouTube, and basically here they are. And well, it takes a second because there we go, and you can see they're all here to see. This is the ones from last week, and then we're currently on this one we're currently on this one right now, October 7th, and of course this is here even though we're running it right now, and of course it'll be all ready to go. But this is on the website, Dallas Trading Floor. So if you want to get on that list, it's super duper easy to do, and that's how you do it. All right, so let's see. Fastly is in a buy zone right now, currently at 100 shares. Buy more? Wow, I don't know. Also, did you buy back your? No, I didn't. Thank you for that question. And as you know, that's what I've been saying. I do have a 110 strike on an option that I sold. No, I didn't do it. I just bought more. I just bought more shares, and then I didn't sell a call this time, but I just bought more shares. So that's what I did. That's what I did. So I just went in and bought some more shares. So, and I think that's doing fairly well. Okay, is it a good time to buy Fastly? Now I think so. I think the buy point, the floor. I'd like to see it settle right at about 117, because that'll be a floor, and it'll probably go up from there. That is a level of resistance. That's what they call a pivot, and the pivot on Fastly is 117.70. So that's a good place to buy it, just because you'll get some support there. So just as for fun, let's look back and see if what it's selling at currently. I think we're just about ready to close here. So hopefully get a closing price here for you. Yeah, it's moved up even higher. Okay, yeah, it's moved up to 120. It's basically moved, as you can see, this is the buy point, this little dotted line here, and it's moved above that. It's in the buy zone, but it's not going to be in the buy zone that much longer. So you might want to consider possibly backing up the truck and maybe buying some, because I do think it's gonna move higher. I think there's going to be some nice buying action on it today and possibly tomorrow. And I think it's gonna base at 117.70. That's going to kind of form a floor because it's on a cup formation, which is a very good chart pattern. It's the second best, cup with handle, of course, being the best. So what do you think about JCPenney? Ooh, I don't know how many people have been watching me, but I did, for full disclosure, I did have a JCPenney bond, and I had that thing it is went out of business. JCP. Oh, it's so sad. Yeah. I sold that bond, thank goodness, because it went bankrupt. I sold that puppy last summer, and it's just not getting any better. There was some rumor that Amazon was interested in the JCPenney, some of their locations, because they do have great locations. And I'm very sad because I shopped at JCPenney's. Well, it's, I'm not a fashion maven, but I really like JCPenney's. It's my kind of middle class store, and I don't know why it's going out of business, but I guess middle class white guys like me were kind of going out of business, so maybe that's why we didn't love JCPenney enough. But I do shop there, and unfortunately, they're going out of business. Kind of a sad thing. So I don't really have anything more to say about JCPenney's in that. I wish everybody that works there, and by the way, they're headquartered in Plano, which is right here in Dallas area. I wish them all the best because I think they have a great store. I just think they got caught in this overexpansion of malls, and in order to compete, you got to have all these locations, and people just aren't shopping at malls, and they're shopping online, or they're shopping at Walmart. So it's a sad day. I really, really like JCPenney, and it would be great if they could be resurrected. I'm not going to hold out for that. I don't know if anyone would really want to do that. Okay. Do you have a website? Yes, I do. Thank you very much for asking, by the way. I do have a website, and it is really super duper easy. It's just www.Dallas Trading Floor. And absolutely, I have a website, and you can sign up for the action trade alerts on the website, and also any educational material that you want to. I have a trading bookshelf, books that have helped me along the way. And the best one, I think, is, of course, the O'Neill book. I really recommend it. And I typically try to bring that up every show. So, it really helps. It gets you started with the CAN-SLIM method, and I think that's a really strong way to learn how to trade. So let's take the next question. Boy, we've got some good questions here. Okay, the buy zone, yes. Okay. Okay. Is it a good idea? I think you can still buy Fastly at the buy point. 117 117.70 is the buy point on Fastly. And if you want to see the buy zone, where you can really buy it safely, and that would be about from 117, multiply that times 1.05, and that gives you a 5% range above that. You could pretty safely buy in that range without potentially suffering a snapback. But it's trading at 120.40, and I think that's the close on it today. Pretty nice close. I think it's doing well, but it had the right pattern, and that's the reason why I had the trade alert on it. So let's see. FL, please. Okay, what is FL? I don't know what FL is. FL. Oops. Okay, let's see if I could get FL. Yeah, Foot Locker. Foot Locker. Well, Foot Locker, what used to be at one time many years ago, dating myself here, but it used to be part of Woolworths. Do you remember Woolworths? Does anybody remember Woolworths? I don't think anyone does. But it used to be part of Woolworths, and then we spun it off. It's been pretty successful. Now, here's the thing. Here's the problem that I see with Foot Locker, and I just want to be straight up front. The retail model for sneakers, i.e. Nike, is changing. They're going to go direct consumer, and I do think that Foot Locker may have some difficulty in that. That said, it has a fairly good chart pattern. Now, here's one thing I like about here's what I like about the chart, and here's what I don't like about the chart. What I like about the chart is that you've got a cup with handle formation. This is the best formation. So I do think that we're seeing some strength here. What I don't like about this chart pattern is the fact that it goes high to low. And I just don't like this angle of attack. It just doesn't work because it's below the 200-day moving average. this is not an optimal place to buy the stock. But let's kind of look at Foot Locker for some other things. Let's look at the buying checklist. No, it just doesn't make it in terms of buying checklist. Only 4 out of 9. 9 out of 9 would be far better. I can't recommend it as a buy. Let's look at the ownership. It does have good sponsorship from funds, but here's the problem. It's a decreasing sponsorship. A year ago, there were 820 funds in it, and there's only 646 in now. No, I wouldn't recommend this one. Sorry, I'm not trying to give you a hard time here, but I think that there's better places to put your money. I think instead of Foot Locker, I think you want to go with Nike. That's NKE is the symbol on Nike. Let's look at their chart, because I think you're going to see a lot better chart on Nike. So here's Nike's chart. I know it's more expensive, but here's the thing. It doesn't matter really the price of the stock. You buy the better stock, fewer shares. That's the way to go. Even though Nike is $130 a share, I think it's superior to Foot Locker. The last buy point on it was a cup with handle, which is an excellent stage 1 base at 104.69. So that's excellent. It's basically in a profit taking range, but it is at a pivot. I do really like Nike here. It's got a checklist that's better than Foot Locker. It's 6 out of 9, and it's probably going to go higher than that as it moves up. Its ownership is excellent, as you can see. Fidelity Contra Fund is there. I really like seeing that. That's a very strong fund. They typically have some of the best stuff in there. So Fidelity Contra Fund is in it. I'm liking that. It has a relative strength of 87. I typically won't buy anything that has under an 80 relative strength. Now, what does relative strength mean? Well, relative strength is how this is trading against the S&P 500. So this is in the top 13% of stocks that are trading in the S&P. So this is quite good. It had an excellent volume day about 3 weeks ago. So there's a lot of confidence with this stock. Also, so instead of Foot Locker, why not just buy Nike? I think you're going to do better with that one. That's my take on it. Don't buy the retailer, because what's happening with the sports companies, and of course Nike is the biggest in the world, is that they're going into a direct-to-consumer model. So when that happens, firms like Foot Locker are going to be cut out of the equation, and it's not going to be pretty, I'm afraid. So I wouldn't be into Foot Locker, but I would definitely be into my Nike. Buy point for VZ. Now, of course, VZ is Verizon, and along with T, that's AT&T. These are the two remaining kind of final the final companies in the Bell breakup. Then it came back together and all that stuff. Verizon, if you're going to own a telecom company, a big telecom company, Verizon is the one to own. Now, I'm not really that psyched on this particular sector. I think it's underperformed. It's carrying way too much debt, in my opinion. Part of the problem is that they're loaded up on all this debt. If the debt, some of it is revolving debt, and if the rates, if we get any inflation at all, these companies are going to have a lot of trouble making their notes. But I do think that if you're going to look at this, it is the better of the two. So let me show you the Verizon and see if we have a buy point. I wouldn't be buying Verizon, just to be honest with you, but there is a buy point on it, and it's on a first stage consolidation base at 62.22, which is pretty good. It's right below there. Right now it's trading at 59.59. So it's right below that consolidation base. And there definitely is a blue dot special. So that means that there is a potential for a buying here. I just don't like the sector, and I don't like Verizon. Everybody owns it. There are 3889 funds in it. It's basically owned 33% of this is owned by funds, but I just can't get behind it because of the industry it's in. It's not too bad. It's a 91 out of 197, so it's definitely in the top. It's about in the top third, which is good. But I'm leery about this area. This company carries a lot of debt, and I just don't see, even with the 5G, and I think they're going to do 5G far better than AT&T is going to do. I just see them basically, it's a very mature company, and I just don't know if you want to be in it. But there is a buy point on it. There is a buy point. It is on a first stage consolidation at 62.22. So definitely have a consolidation, but I don't think you want. I don't really think you want Verizon. I think there's better companies out there than Verizon. Okay, please advise on Upwork, UPKW, long term. So let's look at Upwork, UPKW. I think that's Upwork. Oh, did I get it right? UPKW, UPKW. Is that right? Did I not get that right? UPKW. I'm not seeing that. So let me see if I can give you a symbol. Upwork. I'm just popping it in the machine, seeing what the Upwork symbol is. It's UPWK. A little bit of dyslexia there. UPWK. UPWK. Sorry about that. There we go. There's Upwork. I got it up. It's Upwork. Okay, it just moved beyond a first stage consolidation. There's a lot of stocks that are going to be breaking out of bases right now that we've changed direction on the overall market because we have. It seems like we've had the correction. It seems like we're turning the corner with a fall through day first on the Dow and then possibly on the Nasdaq here. Hopefully today. We are seeing a lot of stuff that have potential breakout. It does have a consolidation base at 1759. Now, I do like the fact that it is trending up from the low that we made on March 23rd. I do like that. I normally don't like a downward trending chart, but the 200-day moving average, which I'm showing you here, is trending up. I do like that. I also like the fact that the 50-day is above the 200-day. That shows increasing interest in the stock. So let's look at the criteria on it. The checklist is good. It's 6 out of 9. It definitely makes that on there. So let's look at the ownership. Well, the ownership is good too. We have increasing fund ownership. I like to see that as well. 94 on the relative strength. I'd say this is a pretty good one. I would say this is a pretty good one. I'd be a little bit careful about buying it. Though at this level, I would want to see if it pulls back a little bit into the buy zone. Remember, it's a little bit extended, not much, from the pivot at 1759. Now, to get the buy zone, you just take the buy point, 1759, you multiply that times 1.05, and that gives you the buy zone. So it's a little bit above the buy zone, but not badly. Not a bad stock, and I think it could be very, very good. We're seeing some very nice volume increase on it. That is a good sign. So all in all, it looks like it's very good. I'd put this one on the ready list. I wouldn't buy this one. I would want to see a little bit more of possibly a breakout on it, and then I would buy it on the breakout. But it's definitely on the ready list. It's a watch list, definitely. It's a ready list, probably. So very good stock. So thanks for bringing that up. And I probably try to feature that one more because I do think Upwork has a good business model, and I do think that they are probably going to do better in this next year. How about the Spider SPY? And of course, this is the world's largest ETF, and many people have their entire net worth and their entire life savings in the Spider. So this is a very, very important ETF, and I always look at this initially every day as well. Now, here's something that you might want to consider. If you don't want to pick stocks, you don't want to trade them on a regular basis. Here's a way that you could make money very reliable and probably beat many of the hedge fund managers on Wall Street if you just do this. If you buy a quality index fund like the QQQ or this Spider, and you only own it 100% when the market is in a confirmed uptrend, and then you sell it when you're in a correction or in a uptrend under pressure, then if you do this, you will probably get a yield of better than 10 to 15% a year if you do this. Then basically the way this strategy works is super simple. You just concentrate on one fund like the QQQ or the Spider. If the market in general is in a confirmed uptrend, you're 100% invested. If if when it moves to an uptrend under pressure, that means it's weakening and it's not on an upward trend. We just came through that with the spider. Then you sell 50% of it. You're 50% in cash, 50% in the index fund. And then if it goes into a full correction, which we've just been in, you're 100% in cash, waiting for it to rebound. Now, when it rebounds on a what they call follow-through day, that's when you go back into it 100%. If you do this on a regular basis, and all this requires is setting a few alerts. And by the way, all this information is available on the web for free. Investors.com has it, as well as some other sites like Yahoo Finance. You can set alerts for this. And if you just do this, you will probably do better than the vast number of hedge fund managers. Isn't that hard to believe? But it is true. And don't take my word for it. I will show you some of the results on this, probably on a later show, but I'm going to show you, if you don't want to be picking stocks, if you don't want to be, now you can make more money picking stocks, but if you don't want to do that, and you just want to do kind of a get your toes wet kind of strategy, this ETF strategy is terrific. And it's totally approved by Investor Business Daily. So they came up with a strategy. I am just telling you about it. That's all I'm doing. And it's a terrific way to go. So very, very nice way to make some serious money. VERI. I'm sorry, VERI. Let's take a look at VERI right now. VERI. And see if that, Verita. You know what? I haven't seen this stock in years. Proprietary artificial intelligence platform. No, okay. No, I'm sorry. Is it very? Yeah, I don't know. This is interesting. Veritas. I don't know this company. And I know a lot of the techs, and I don't know this one. It's in beautiful Costa. According to this, it's beautiful Costa Mesa, California. It's a very nice place. It looks like a near penny stock. It's basically trading at $10.29 with a relative strength of 97. Wow, that's good. That's a very good, strong. Yeah, it's got increasing fund ownership. No, it's a little bit down on the fund ownership, but it's still really good. It doesn't have contra fund or anything like that in it, so nothing really spectacular. 6 out of 9, that's good. The industry and sector, it's good but not great. Holding its own, definitely a watch list. I want to see a little bit more conviction on this. I'd like to see this thing move probably up to about the 1940 level before I'd be interested in it. So it's got to kind of double in price before I'd be interested in buying it, only because, it looks as if the 50-day line is trending down and the 200-day is trending up. Now, if they cross, that's a death cross, and that's not a good thing. But it does look like it is moving. It's possibly bouncing and it's moving higher. So I really would watch this stock. I wouldn't be in the stock until it reached about 1940. I wouldn't be really in the stock as well. I wouldn't be in it. Okay. Let's see. I have Apple. I have Jim. I have Apple and I have Fastly. When to sell? Well, with Apple, I do think that we're going to get a bounce on the upcoming 5G. I do think we are going to, but I think that where you want to sell that is right before they come out with the new iPhone, because I think that's going to give our peak. It's been pulling back a little bit. Here's the thing with Apple. It's very widely held, so it typically tracks a similar path that the QQQ does. So that's the index fund. So I would be interested in possibly selling this. I would probably hold this through up until the day before the big 5G announcement happens, because that's when probably it's going to be at its peak. It does look like it's moving. It's starting to move higher. It's got a relative strength of 92. That's pretty good. It's actually excellent, but down from where it was before. Let's see. On the sectors, let's look at the check. Yeah, this is the problem that I have with Apple right now. I don't have a problem with the company. It is a great company, but it's sort of in what they call in Wall Street, it's sort of priced to perfection. I do believe it's, with this split and with everybody in it, it's sort of priced to perfection. It's a terrific company, and in no way am I dogging on this stock at all. But I do think that it is kind of maybe run its course, at least for right now. I do think we're going to get one last little bit of movement up, and that's going to be right before the 5G rollout. And I think that's going to be very good. So I would be looking to sell that one probably the day of or the day before the 5G thing. I really would. Now, on Fastly, it's a little bit different. It's a little different stage of its growth because stocks go through seasons just like everywhere else. We have an IPO and then it's in spring. The season right now for Fastly, it's in its springtime. It's in the springtime. It's just come out of the IPO. It's looking strong. People are getting into it. So it's in the springtime. Apple is more like in the fall and it's getting ready for winter. Not that it's going to go away, not that it's going to die. It's just not going to be growing the way it was. And that's just my opinion, at least for right now. So maybe that'll change, but I would be in Fastly. If I was in Fastly right now at about 115, I'd be on it at least until 135, 140. And then if it reached that, I would sell half my position. But I would probably be in. Fastly is starting its move. I think that the move in Apple has been going on for the last few years, and it's done extraordinarily well. But it is, it's just a different phase of its life cycle, and that's really it. Okay, ALXN, ALXN. Let's try for that. ALXN. Alexion Pharmaceuticals. Yeah, this is one of the small pharma stocks. It doesn't look like a bad stock, but there's just better ones out there. Let's see if I can find a better one. This is in Boston. I just want to find a reason for buying. It's 8 out of 9. That's very good. Checklist is excellent. Let's look at the ownership on it. Good fund support. Very nice. I'm just trying to think why it's got a 68 relative strength. I'm not that psyched about that. Let's see if I can find a reason to buy this, or possibly a stock that is similar to this that you might want to replace for that in terms of that. Let's kind of look at the group that we're in. Wow, look at that after hours. Very nice. Oh, it popped up. Volume's up. So maybe I'm eating some crow here. So let's look at this. Something must have happened. Pretty exciting, because it definitely moved up very, very nicely after hours. We've got a previous close. It's up. It looks good. There's lots of volume. I'm loving that. Let's see if I can figure out anything here that would, just see if what we can see on this, to see if we can do this. Okay, so it basically is, at least in its group, it's basically number 5. Veritex is ahead of it. The stock I like is this GNUB. This is the one I really like, and this has been on my show before. Let's look at GMAB just to kind of give a comparison with Alexion. Let's give it a comparison. This is down a little bit, but it's stronger. The chart is a little bit, it's number 1 in the group. This is the one I would buy. GMAB. This is the one I would buy instead of Alexion, but they're both good. I just think that this one is better. This is a Danish company, and it's been pretty successful. So let me just kind of do another screen on it with MarketSmith to see if we can find one that is indeed better. GM. Maybe I think that there we go. Is that right? Did I get GN? Okay, there we go. Okay, this is a relatively new issue. This is a IPO, but it has a very nice IPO base, and it's right on this line. I think that this is your better bet. We have some nice fund ownership here. That's good. 68. It's increasing. Let's take a look at the checklist. It's 100% checklist on the buys. So we're looking good there. We've got excellent fund ownership, as I indicated before. It's above the 200-day line. It's above the 50-day line. It's really hugging that 50-day line. Now, the only issue for buying it right now is it's only 28 days from earnings. So that's a little bit tight on there, but it does have some nice volume in terms of buying. So people are buying this. Funds are buying this. I think this is the one you want to be in more. Now, On this one, I would be in it up until earnings, and then I would sell on the day of earnings and see what happens, because the biotech area is typically very volatile. So it's always better to buy it up to the earnings date, sell it, and then see what happens, and then possibly buy it back. Okay, Fastly buy point. I put that out there. Great. All right. Let's see. So, what is the exit point for Fastly? Well, the way I'm looking at that is that the buy point on Fastly currently is 117.70. So the exit point, if you do it as strict, if you were strict on that, the exit point for Fastly would be 20% above the base price that you bought it at. And the way you calculate that, of course, is by taking 117.70 and multiplying times 1.2, and that gives you a 20% gain. If you get 20% gain in the stock, that's when you should consider selling half your position, taking it in cash and letting the rest ride. And the reason you do that, of course, is so that you can recycle your capital. But that's where it is for Fastly. Okay. ABT and SLF. Let's look at ABT real quick to see what's happening there. ABT. All right. And that's Abbott. Well, okay. Here's the thing about Abbott's Ready test. I'm sure that you've been reading about this in the press, because the press has been covering this in a big time way. There are some other companies in this space. It's off a little bit. I'd be a little bit careful about buying Abbott at this point. This is one of the big pharma, so it's not like you're buying a pig in the poke. This is a quality stock, and Fidelity Contra Fund is in it. I love seeing that. That's a that's a good housing seal of approval, really. It's 6 out of the 9. That's my minimum. I can't really fault this. It's a 81 relative strength. I'd like to see higher than that, but this is a biotech and it is a big one, so that's not bad in terms of the way it's looking. Would I buy it at this level? Well, there is a buy point on it. It's a flat base, not the greatest base, but it is okay. There is a pivot on this at 114.19. We're basically below that pivot at 107.72. So I would wait on this one a little bit until it moved convincingly above that pivot at 114. So that's kind of my take on Abbott. So let's see if I can give you, you had indicated that you are interested in Abbott, but what is the other one? Oh, SLF. I'm sorry. SLF. Let's look at SLF real quick. SLF. And there we go. Sun Life Financial. This is an area I am not really big on the insurers, though Sun Life is probably one of the best insurers out there. Interestingly enough, AIG, which did go bankrupt, is one of the other really good ones too. But I can't really recommend this. It's only got a relative strength of 63. It does have a buy point on a flat base, which is not the greatest base, of 42.65. So it's right below a buy point. I'm really not that excited about an insurer at this point in the business cycle. I typically like insurers if the market has been moving up more considerably. The problem right now insurers are having is that the rates are so low that many of their investments aren't paying. So I'm a little bit afraid about their reserves. Not that I'm an expert in that, but that's why I'm tending to shy away from the insurance industry right now. 6 out of 9, that's good. Let's look at the fund ownership. Very strong fund ownership. It just went up 2, but it's going in the right direction. So if you're going to look for an insurance company, this is probably one of the best ones. I just can't recommend it because I don't like the sector, and I just think you can do better. I think you can do better in growth stocks. Financials right now are not carrying the water, unfortunately. They just aren't. So that's kind of my viewpoint. I think Abbott is better than SLF, but I think they're both kind of weak, and I think that you could do better. I think there's just other areas to go in that you can make more money in. So, hello, I have no question. Oh, well, thank you, man. Thank you very, very much for giving me a vote of confidence. And by the way, if I can entice you to go over to the website and sign up for the action trade alerts. that would be super. And I'll just show you a quick picture of that website. That's www.DallasTradingFloor. And this is the website here. And subscribe to our free, remember this is free, trade alerts, first, last, and email. Subscribe, and you're good to go. And I put out a action trade alert today on Fastly. So hopefully that was good. Okay, thoughts on BE. BE. So let's look at BE. BE. Bloom Energy. Wow, I don't know that. Oh, in renewable. Okay, electric, residential, commercial. Okay, I'm not necessarily against this because it's electricity. Right now, I kind of want to stick away from the oils, but in terms of that, it doesn't look bad. They're definitely 99. That's super. There's a buy point. It's got a consolidation base at 1967. Wow, this is looking good. June, you're a good stock picker. This is a good one. Yeah, look at that. It's moved up in terms of the funds. Wells Fargo growth is it. That's also excellent. It's got a checklist that you can buy. Wow, that's good. Wow, funds are 41%. You know what? I think this is possibly a winner. I have to do a little bit more research on this one. Don't know this one offhand, but I'm liking this actually. Bloom Energy, BE. Thank you, June. Thank you so much. You definitely come up with some very, very good suggestions here. I think this is a good stock. I think this is a good stock. Thank you very much for bringing it to my attention. I'll put it on and maybe on the watch list and see. I just haven't been looking at the direction. So, but I like everything I see on that stock. So, anyways, that's the right. Check out TIGR Tigger TIGR like Winnie the Pooh and Tigger TIGR. Let's look at Up FinTech Holdings, the Chinese company that's online broker. I don't know. You can make money in the Chinese stocks, but I'm a little bit leery. It looks as if it's got a relative strength of 84. That's definitely good enough to buy. 80 is my limit on that. It's pulled up to the 50-day moving average, but it's sloping down. I don't really like this one. It does have some fun sponsorship. 6. That's not really that good, but it's okay. 6 out of 9. That's the minimum. I can't get excited about this one. Unfortunately, I can't get excited about this one. It looks like there's a lot of selling off going on. I think you, and it has negative cash flow, just barely, but negative cash flow. I think you want to possibly look for some other else. Unfortunately, is there any 5G stocks happening? Well, let's look at Skyworks. I haven't been in Skyworks for a while. SKWS, I think that's right. Skyworks, is that right? No. Let's see. SWKS, thank you very much, Bourbon. SWKS. There we go. So actually, it's holding its own, looking good. Not gapping up or anything, but definitely holding its own. It's right above a buy zone at 149.86. So let's see if it's buyable. Is it buyable? Well, 6 out of 9. That's good. Are the funds in it? Yes, the funds are, and the Fidelity Country Fund is in it. Yeah, I'm still liking this. Increasing fund ownership. 88 relative strength. This is good. I mean, I think it's going to move right up. The pivot on this one is 138.22, and we're above that a little bit. But I do think you could, if you really want to get into this, I think you could buy it at the 50-day line, and that's right about 142. So it's a little bit extended. I'd like to see it pull back to the 50-day. Let's see if I can look at the daily chart to see if there's any entry points here. Okay. I think that you don't want to buy it above 144.87. It's 149. So I'd like to see this thing pull back a little bit into the buy zone. And I think you might want to, this is definitely one to consider. The 21-day exponential is moved above the 50-day. That's excellent. And the 10-day is above the 21-day. So this is all very bullish in terms of the look here. So let's look if we're going into earnings. Are we going into earnings? Okay, we're coming off a cup with handle base. This is a good one. I think Skyworks is sort of the one you want on the 5G. So I think Skyworks is the one. I'm not in it currently, but I'm liking it. And, I think it's possible to do really good stuff there with that. Okay, Qualcomm. We got another thing from Qualcomm. QCOM is the symbol on that. Qualcomm. Well, Qualcomm's moving up nicely. 123. It's a little bit extended. It's a little bit hard to buy at this level just because it's extended, but it looks like there is a potential cup forming, a pocket pivot at 123. It's at 123.03, so it's right at the pivot, isn't it? Isn't that interesting? Okay, let's look at the weekly chart. When you have these reversals on when you have these reversals on the market like we're having right now, when it goes from a marketing correction to a confirmed uptrend, that's when these pocket pivots are really important. And we're definitely there. We're definitely at a buy point on Qualcomm. So thank you very much, Mervin. That is a great call. It looks as if the pivot is 123.93. It's at 123.03. So it's right at the pivot. Let's see if it pulls above that 123.93. If it pulls above that and it stays with volume, then it's possibly a buyable base because it does have a cup and it's looking pretty good. So this one is also a very good 5G stock. So Skyworks and Qualcomm, I think, are the two that you want to be looking at. Well, I've gone a whole hour. And thank you very much for everyone tuning in. So appreciate it. If you want to get on the action trailer, it's super easy to do. All you have to do is go to www.DallasTradingFloor, and then I need your first and last name and your email address. It's free to subscribe. Cancel anytime you like, and you'll be getting the action trailer alerts on that. And if you're on YouTube, and if you're watching me on TikTok, super easy. All you have to do is go to my profile, hit the link, and you'll be taken directly to the sign up page. So until tomorrow, happy trading. I hope everyone is staying safe out there. Looks like the market's improving. We're gonna start putting some of our cash to work because it looks as if we may be in a little bit of an uptrend until the until election. I'm gonna keep you informed about follow through days, because if we've had a follow through day on the Dow, and if we get one on the Nasdaq, then I think we want to start putting the pedal down a little bit, moving out of cash into the market. So thanks, and I will see you tomorrow.